Hello, thank you for joining us today. So the ECB's QE purchases are set to end this December, but the stock of bonds on the central bank's balance sheet will remain unchanged. Indeed, the ECB is not selling bonds and is also reinvesting the proceeds of bonds which have matured. As a result, this is likely to keep a lead on long-term interest rates for the foreseeable future. It should allow banks to continue to finance the economy, as evidenced by the pickup in credit growth in the Eurozone. Although Europe's economic and political environment is currently far from optimal, more policy easing is not an outcome that one should wish for. Indeed, it would mean that the ECB's reflationary policies have failed. The ideal outcome would be for the ECB to reassure that ammunition remain, so as not to be in a position to actually use them. To achieve that balance, the ECB needs to show it has options. The first option would be more QE, but it is effectively ruled out by the limitations agreed to the QE program, whereby the ECB cannot hold more than 1/3 of the sovereign debt of any given country. The second one would be a so-called Operation Twist. It has been used by the Fed in the past. It involves lengthening the maturity of the bonds held by the central bank in order to weigh on long-term interest and support growth. In fact, this is something the ECB is already doing when reinvesting the proceeds of maturing bonds into long-dated papers. Option 3 has to do with TLTRO program. TLTROs are credit lines granted by the ECB back in 2015-2016 to Eurozone banks at very advantageous conditions, provided they lend to the economy. Banks are facing a cliff edge, as half of the 725 billion euro of outstanding TLTROs reach maturity by mid-2020. The ECB has already hinted that it could launch a new program in the coming months, therefore easing European banks, from the periphery in particular, into a transition period during which they could continue to support the economy. Investors, on their end, remain dovish. They anticipate further TLTROs, low interest rates, as well as the appointment of a dovish ECB president next year. But beware of hawkish surprises, as a pickup in inflation is anticipated in 2019. That is why we hold an underweight view on long-term EMU bonds and prefer short-term durations. Thank you again for joining us and have a very nice day.